Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest growing regulated all-in-one trading and investing app. Whether you're looking to invest in US stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the details are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome to the Deep Dive. If you're looking for a synthesis of where digital assets and institutional finance are headed, well, you've come to the right place.
We've been looking at the latest filings, corporate announcements, global reports, and it's not just news, it's really more of a blueprint.
A blueprint, I like that.
Yeah, and that blueprint shows three powerful forces, all converging at the same time. Our mission today is to connect these dots.
Okay.
You have this systemic pivot in U.S. regulation, the, aggressive infrastructure being built by industry giants, and then the really surprising part, the geopolitical moves in places like the U.K. and the Middle East.
And taken together,
Yeah.
it signals this massive shift toward legitimacy and scale for the whole ecosystem.
Exactly.
So we absolutely have to start with that regulatory pivot. For years, the U.S. has just been, well, a mess of confusion and regulation by lawsuit.
Right.
That period might have just ended, at least for spot trading. The U.S. Commodity Futures Trading Commission, the CFTC, just made an announcement that, it fundamentally changes everything.
It's a monumental shift, and I don't think the market has fully priced in the structural gravity of this yet. The acting chairperson, Caroline Pham, she announced that spot crypto can now be traded on U.S. federally regulated exchanges.
For the very first time.
For the very first time. We are talking about moving the entire market out of the shadows and onto, fully supervised infrastructure.
Okay, so let's unpack this for everyone listening.
Yeah.
Why does the CFTC's green light matter so much more than just a press release? What does it actually unlock?
Well, it hits the single biggest blocker for any institution. Legal risk and customer safety.
Right.
Historically, if you were an American trader or a fund, you were basically forced onto offshore platforms. No federal consumer protection, no robust auditing.
Which expose users to huge risks, fraud, platform collapse, hacks.
All of it. This move creates a safe, federally regulated onshore market. It brings stability. It brings trust.
So it's the institutional stamp of approval
Yeah.
that all the TradFi players have been demanding before they commit serious capital.
Precisely. And that stamp doesn't just reduce operational risk, it cuts down the legal uncertainty. Banks, hedge funds, asset managers, they are all, by nature, incredibly risk-averse when it comes to compliance.
They can't afford not to be.
Exactly. So when the federal regulator steps in, it lets them participate without that fear of some surprise enforcement action down the road.
And there's some political context here too, right? The CFTC has historically been, let's say, more friendly to crypto than others.
They've often been described as a massive fan of Bitcoin, viewing it as a commodity, which is, a very sharp contrast to some of the detractors we've seen, like Gary Gensler.
So does that historical bias make this approval less stable? I
Yeah.
mean, what happens if there's a change in administration or leadership at the agency?
That is the critical question. And while the decision is based on legal interpretation, sure, any regulatory move can be challenged. But once the infrastructure is built and once real money starts to flow, it becomes incredibly difficult to reverse.
It sets a precedent.
It does. And this is a clear strategic move. It strengthens the U.S. position as a global crypto hub, directly competing with London, which just passed its Property Digital Act of 2025, and Singapore.
So regulatory clarity doesn't just lower risk, it gives companies a roadmap. They can shift from just playing defense to actually planning long-term, aggressive product rollouts.
Absolutely. The U.S. is basically hanging up a sign that says, "We want this business here." That signal lets builders innovate with confidence.
And here's where it gets really compelling, because you can already see the industry reacting to this, consolidating their power. Let's dive into Ripple.
Oh, they are executing an extremely aggressive strategy. They want to be that singular one-stop shop for global payments and digital asset infrastructure.
And they're putting their money where their mouth is. Almost $4 billion in acquisitions.
They're not just participating, they're trying to write the rules for how institutions engage with this stuff. They're building a complete end-to-end payment stack that operates 24/7, unifying 4 core services.
Okay, walk us through these 4 components. And, more importantly, what specific problems do they actually solve for a big corporate user?
So first you have G Treasury. Think of it as enterprise treasury intelligence. Basically, tracking and managing corporate funds.
Okay, pretty straightforward.
But the real engine is Rail. That's their stablecoin payment engine. This is critical. It lets a huge business move money globally, instantly, with super low costs.
And how is that different from a normal bank transfer?
The key is abstraction. The business using Rail doesn't have to buy or hold crypto. They don't need to mess with wallet addresses or private keys. Rail handles all of that complexity behind the scenes.
So it just works.
It just works. For a multinational, that cuts out tons of intermediaries and turns a process that took days into seconds.
Okay, so that handles speed. What about security? Especially at an enterprise level where the volumes are just immense.
That brings us to number 3, Palisade. It's their high-speed digital asset custody solution. It uses advanced cryptography, specifically multi-party computation, or MPC.
The MPC tech, right?
Along with zero-trust security. For a bank or a high-frequency trading desk, this is a game changer. It splits the private key into multiple shards, so there's no single point of failure.
And practically, what does that mean for performance?
Performance is immediate. Palisade can provision wallets, sign transactions, process refunds, all in milliseconds. It's built for that kind of institutional speed and volume, with compliance baked right in.
And the 4th piece of the puzzle is Ripple Prime.
Yes, Ripple Prime. This is all about institutional liquidity and execution. It provides institutional-grade, over-the-counter trading, clearing, and financing. And that part of their business has already grown threefold.
A 3-fold increase. That shows the demand is already there.
The demand is definitely there.
So the narrative is clear. A single integrated 247 financial stack. But the obvious question, the elephant in the room is always Swift. Isn't this still too small to really pose a threat?
You're right to challenge that. Ripple won't displace the entire Swift ecosystem overnight. Swift is entrenched in over 200 countries.
It's the default.
It's the default. But Ripple is not going after everything. They're focused on disrupting the most profitable parts. High-value corporate flows and cross-border remittances. Swift's advantage is ubiquity. Ripple's advantage is speed and cost. They're chipping away at the most valuable pieces of that old correspondent banking model.
Meanwhile, you've got another major exchange, Kraken, and they're taking a different approach. Less about building the plumbing and more about pure white-glove client acquisition.
Kraken is executing a very focused, high-touch strategy. They've partnered with Dubai Group to bridge traditional finance and digital assets for institutions in the U.S. and Europe.
But the real tell, the insight into their strategy, is this new VIP program. They're explicitly copying the private banking playbook.
That's spot on. It is an exclusive, invitation-only program for ultra-high net worth individuals, and the barrier to entry is just staggering.
What are we talking about?
Clients have to maintain a minimum average balance of $10 million or trade at least $80 million a year. This isn't for retail. This is for generational wealth.
$10 million.
Yeah.
I mean, does competing on luxury perks, I saw they're offering Formula One tickets, does that detract from the seriousness of the tech? Or is this just what it takes to get that money to move?
It's a fascinating contradiction, isn't it? For this demographic, security and speed are just assumed. They're table stakes. What they really want is trust, discretion, and a human to call.
So they get a dedicated relationship manager.
A dedicated manager, 24/7 support, access to in-house experts for trading strategies. It's a full white glove experience. And yes, the perks go way beyond trading.
Formula One, football matches.
Exactly. Private boxes, cultural events. Kraken knows that to pull these vast pools of capital out of traditional wealth management, they have to compete on prestige and service, not just on tech.
Let's pivot to the global political stage, because these infrastructure moves aren't happening in a vacuum. Macro events are having a huge impact.
And the UK is a perfect snapshot of this. You're seeing digital asset money actively seeking political influence. Reform UK, led by Nigel Farage.
A huge Bitcoin proponent and a major critic of CBDCs.
A very vocal critic, yes. They just received a monumental financial injection.
We have the number on that. $11.4 million from Christopher Harbour, who has ties to Tether and Bitfinex.
And this is so significant. It's the largest single donation ever made by a living UK donor. It instantly solidifies Reform UK as the dominant crypto-friendly party in that political cycle.
So the takeaway is that this capital is no longer passive. It's actively trying to shape policy.
Exactly. It's buying influence to ensure favorable regulations at the highest levels.
A serious signal. Now, let's swing over to the Middle East. We're seeing these long-term strategic plays in both Dubai and Abu Dhabi.
Dubai is really focused on compliance and institutional risk. The Japanese firm Camino just got the first license extension for collateral wallet services under Dubai's VARA license.
Okay, why is that so crucial?
Because it lets them offer institutions full collateral management tools in a legally permitted, regulated, and this is the key, segregated environment.
Segregated. Why is that word so important to a risk officer?
It all comes down to counterparty risk. Institutions need absolute ironclad assurance that the collateral they post for trades can't be mixed with the exchange's own funds.
Or touched by a bad actor.
This license extension shows Dubai is serious about providing the same level of asset protection you'd expect in London or Singapore. They're building a reputation for being stringent.
And at the same time, Abu Dhabi is making this enormous investment, not in crypto directly, but in AI leadership. Why should a crypto investor care about an AI scholarship?
Because the future of finance, especially DeFi and tokenization, is fundamentally dependent on high-speed computation and advanced data analysis, which is AI.
Right.
Abu Dhabi is stepping up with this new Tahnoon bin Zayed Scholarship in Artificial Intelligence Excellence. It's a 6-year program for 350 top-tier students.
So they're playing the long game.
A very long game. They recognize that future economic dominance won't just come from oil, it'll come from being a global center for advanced tech. The complex math needed for future decentralized networks and tokenized economies. It all requires this kind of dedicated AI talent. They are planting the seeds right now.
That connects the dots perfectly.
Right.
So let's ground all of this in the current market reality. As of today, December 5th, where do we stand?
In the immediate term, things are still a bit cautious. Market sentiment is registering in fear territory with a score of about 25.
So the short-term price is still very susceptible to macro news.
Very. And you can see that mixed sentiment clearly in the ETF flows. We saw net outflows overall, mostly from Bitcoin. Overall net outflows were almost $28 million, but that was driven almost entirely by Bitcoin ETFs, which lost about $140.9 million.
But in contrast, Ethereum saw huge inflows.
It's a massive influx, yeah. $140 million into Ethereum ETFs.
And why the sudden surge for ETH?
That was directly tied to the recent FUCA upgrade. It was a technical upgrade focused on improving data availability for layer 2s, making the network more efficient. Basically, it made Ethereum faster and cheaper to build on.
And the market loved it.
The market loved it. The price pumped over 6% almost immediately. It's a textbook case of fundamentals driving price.
And interestingly, Solana ETFs saw outflows, maybe for the first time, about $32 million out.
Yeah, which shows capital is moving quickly as the tech landscape shifts. We also saw a really sudden and significant pump in Zcash,
The privacy coin.
the privacy coin. Its market cap rose by nearly $1 billion in just 24 hours. So that might signal renewed interest in privacy-focused assets.
Okay, finally, let's look at the dry powder. Stablecoin volume. What's Tether telling us?
The total volume of Tether, USDT, is sitting below that critical $100 billion mark. It's at about $92.2 billion.
Why do we track that so closely?
Because historically, a really big sustained rally, the kind that pushes Bitcoin to new all-time highs, it requires a lot of dry powder waiting on the sidelines.
And what's the number we'd want to see to feel truly bullish?
Ideally, you'd want to see that total stablecoin volume consistently up in the $150 to $180 billion range. The current level suggests that while the institutional plumbing is being built, the immediate cash to fuel a massive surge isn't quite there yet.
The capital is waiting for a catalyst.
It's waiting for the next catalyst.
So let's synthesize all of this. We have federal regulation in the U.S. creating a legitimate onshore market. We have giants like Ripple and Kraken consolidating power into these unified high-touch stacks. And we have regional powers in the Middle East and the UK political system making huge strategic bets on the future.
Every single one of these stories, from the CFTC approval to Ripple's 4 acquisitions, it all points to one clear outcome. The industry is rapidly, and I think irrevocably, transitioning from its speculative retail childhood into a robust, compliant, institutional financial infrastructure.
The conversation is no longer about if it's happening.
It's about how fast it can scale to meet that global enterprise demand.
And so here's something for you to reflect on. We've seen that tech upgrades like Ethereum's FUCA upgrade and structural changes like the CFTC news have immediate impacts. Now consider that stablecoin volume is below that critical $100 billion mark. The capital just isn't there for a parabolic run right now. What macroeconomic or geopolitical event completely outside of crypto, a global interest rate pivot, an unforeseen international crisis, what would have to happen this weekend to inject enough fresh capital to finally push Bitcoin past that $100,000 threshold? That's the question worth pondering.